Hello everyone. The 10th and final video in this series is about investments. Stocks. Stocks represent a fractional ownership of a corporation. Stocks are also called equities. Number 1. Corporations issue and sell stocks to raise funds to operate their business. They are usually bought and sold on stock exchanges. If the company has 100 shares and you own 10, you own 10% of the company's shares. Number 2. There are two types of stocks, common stocks and preferred stocks. Common stocks have voting rights and receive dividends paid out by the company. Preferred stocks have no voting rights, but have a higher claim on assets. Owners of preferred stocks are paid dividends before common stock owners and get priority if a company goes bankrupt or is liquidated. Number 3. An individual can buy directly from the primary market or from a secondary market. A primary market is a stock exchange market and from the company itself, while the secondary market is from another shareholder. Number 4. There are 60 stock exchanges in the world, 16 of which account for over $1 trillion market capitalization each. These 16 are in North America, Europe, and Asia. New York Stock Exchange alone is worth $18.5 trillion, followed by NASDAQ with $7.6 trillion. Bonds. Bonds are debts of the company or government. Number 1. When a company needs money, they may issue a bond to finance that loan. They pay the investor a set amount of interest. Number 2. Corporate bonds have a higher interest rate than government bonds and are more riskier. Bonds typically pay regular interest payments to investors and return the full principal loaned upon bond maturity. Hence, bond prices vary inversely with interest rates. Number 3. Bonds offer a good diversification to stocks as they have different features and have a higher priority if a company is liquidated. Number 4. There are 4 types of bonds: corporate, government, municipal, and mortgage. Number 5. Bonds are rated by agencies such as Standard & Poor's and Moody's. The highest rating is AAA and the lowest is C or D. The top 4 ratings are safe or called investment grade, and anything below BBB for SP and Baa3 for Moody's is considered junk bonds or high-yield bonds. Number 6. Bonds are priced at face value of $1,000 per bond, but the prices vary after entering the open market. If a bond is priced at a premium, the investor receives a lower coupon yield, and if it is priced at a discount, the investor receives a higher coupon yield as they pay less than face value. Number 7. Bonds are best kept in a tax-sheltered account as owners of bonds have to pay taxes on the interest received. If a bond is purchased at a discount, capital gains tax needs to be paid when the bond matures and you receive the face value of the bond. Number 8. Local governments or municipalities may issue municipal bonds which provide tax-free interest payments at the local, state, or federal level. Mutual funds. Mutual funds consist of a diverse and professionally managed portfolio of stocks, bonds, and other securities. The advantages of funds are professional management, liquidity, diversification, and variety. Number 1. Mutual funds are made up of money pooled together by investors, and they use that money to buy stocks and bonds and other securities. Number 2. There are no voting rights, and they charge annual fees called expense ratios. In some cases, they also charge commissions. These charges reduce the overall returns. Expense ratios are around 1 to 3%, and commissions are called load and may be incurred when buying or selling the funds. Number 3. Mutual funds provide returns to the investors in 3 ways. Number 1. Capital gains from selling stocks are passed on in the distribution. Number 2. Dividends from all the stocks and interest from bonds are accumulated and are given in a distribution at the end of the year. And number 3. The increase in fund holdings can cause an increase in the mutual fund shares, which can be sold for profit in the market. There are 8 types of mutual funds. Number 1, equity funds. Number 2, fixed income funds. Number 3, index funds. Number 4, balanced funds. Number 5, money market funds. Number 6, income funds. Number 7, global or international funds. And number 8, specialty funds. Exchange-traded funds. Exchange-traded funds are a type of pooled investment security. Number 1. ETFs include diversification, low expense ratios, and access to stocks across industries. ETFs can contain all asset classes and offer low expense ratios than buying stocks individually. Number 2. ETFs are more tax efficient compared to mutual funds and stocks. The difference between a mutual fund and an ETF is that an ETF value keeps changing during the market hours, whereas mutual funds only trade once per day after the market closes. Number 3. ETFs include higher fees compared to mutual funds. Number 4. Some ETFs may not have liquidity. And number 5. There are 5 types of ETFs: stock ETFs, industry ETFs, commodity ETFs, currency ETFs, and inverse ETFs. Foreign exchange. Foreign exchange is trading one currency for another on the forex market. The foreign exchange market, also known as the forex market, is a global marketplace for exchanging national currencies. Number 1. Forex market trades in lots and sizes. A micro lot is 1,000 worth of given currency, a mini lot is 10,000, and a standard lot is 100,000. Number 2. Forex market, unlike stock exchanges, are open 24 hours a day, 5 days a week, so you can buy or sell currencies anytime during the day. Number 3. Unlike other markets, foreign exchange does not have a clearinghouse or central body to oversee. Number 4. Traders profit by the upward movement in a currency if they are buying or weakness if they are selling. Number 5. The most traded currency is USD, and there are pairs. The pairs are American dollar and euro, the American dollar and pound, and the American dollar and the Australian dollar. If a pair doesn't have USD in it, they are called crosses. Thank you for watching, and I hope this has been an informative video. In the description box below, there is a link for a Quizlet which will help test you on investments. Comment down below if you have any suggestions or questions, and click the like and subscribe button. See you next time.